What's up everybody, Nate here, and over the last couple of years we have seen an unprecedented amount of changes in the jobs market. In fact, over 25 million US jobs were lost at the height of the pandemic, only to be lost again as the Great Resignation saw 70 million more people voluntarily quit their jobs over the summer of 2021 and into 2022. But in 2023 we could see an even bigger shakeup happen in the jobs market, and even more jobs could be on the line. Our economy, not only in the United States but across the world, is slowing right now, and that means a lot of businesses and, more importantly, jobs are going to be affected. This could mean jobs kind of reform, a lot of jobs get lost, and the entire jobs market gets a whole lot more competitive in 2023. So what exactly could we see next year in the jobs market? Well, many businesses and startups have been put on the brink of financial distress because of really high interest rates and really low consumer spending. We have a really big and really bad inflation problem in the United States and pretty much around the globe, and that means that central banks, including the Federal Reserve, have been raising their interest rates in order to bring down demand and kind of eliminate this inflation problem. Well, in doing that, that could ultimately mean a lot of jobs get shaken up and our entire jobs market gets a whole lot more competitive. As the Federal Reserve starts to raise up those interest rates really high and really aggressively, that means there's going to be a lot less funding opportunities for startups and for just businesses in general. So they're not going to be getting those investor dollars, and they need that money in order to grow their business at a sustainable level. They got this a whole lot in 2021 and in 2020 because really low interest rates were kind of around for a very long time. That meant that investors were pouring a lot more money into these companies, and these companies then took this money and ran with it. They grew super fast. They hired a whole lot of people, but in 2022 that has caused nothing but problems. Part of this was because of the Great Resignation. So right after the pandemic, you had basically this great awakening from the American workforce, where now they were trying to figure out what they wanted to do next. Many people were thinking about what they've been doing for the last 5 or 10 years, and they realized that they were at a dead-end job, or they just didn't like the career that they were in, so they wanted to swap things around. They wanted to go back to school, you name it. They wanted a big change in their life, and that started at their employment. So they got a new job, and typically, because there were so many jobs out there, employers had to be really competitive. So they decided to offer really high wages. They decided to offer really big opportunities and benefits for a lot of American workers to sort of entice them to come to their company over another brand. And because of really low interest rates and a ton of consumer spending, you had companies basically creating positions out of nothing. They were creating jobs and people were filling them, and that kind of helped our economy and might have even made the inflation problem worse in the United States. The big concern right now is that a lot of this money is starting to disappear, so startups are not getting the funding that they need to continue to grow at the breakneck speeds that they had back in 2021, and they're probably not going to be able to grow in 2023 as quickly because there's just not as much consumer spending either. So everything is going to be a lot lower, and that means a lot of your startups and a lot of your businesses that thrived over the last couple of years might just barely survive. Many VC firms and experts believe that the companies that got huge, big funding rounds over the last couple of years may be able to ride out this really low investment period because they have a lot of money on hand. They're able to take this money now and just use it to coast until everything kind of clears up in our economy and conditions improve for VCs and individual investors to begin pouring more money into startups and in the New York Stock Exchange. But what about everybody else? So all of these other companies that are struggling, like a lot of your smaller startups, a lot of small to medium businesses in the United States, they don't have that opportunity to take all of this funding because they didn't get huge funding rounds over the last couple of years. So now they are left with a really grim choice. One of the things that you're going to see in 2023 is a lot of these smaller startups are going to sell to a bigger company in the United States. They're not going to be able to survive, so they're going to get swallowed up, and another big firm is ultimately going to take their share in the market. So now a bigger company is going to have a bigger share in its particular niche. Many other firms are simply going to try to cut costs and try to survive as long as possible. So that could mean actually cutting their supply chains, or it could mean actually cutting people and sending a lot of people into unemployment because they need to keep their brand alive for longer. And then finally, you could see a ton of businesses actually just file for bankruptcy because they can't survive and there's really nothing they can do. Now, this has a lot of implications for the labor market. I've talked a lot about how this could cause a lot of unemployment in the United States because now you have all of these startups and businesses in general that are cutting costs, or they're just sort of eliminating positions in general, not to mention going into bankruptcy, and that could cause a ton of jobs to be lost all at once. But the bigger shakeup that I think we're going to see in 2023 is a lot of people actually just switching jobs all the time. Great Resignation was a time when people were switching jobs all the time for a lot of different reasons like pay and benefits, but what we're going to see in 2023 is a lot more of a competitive jobs market, meaning the best and most successful workers are going to continue to thrive next year. What I mean by this is your executives and people who are leading these startups, well, they're not going to disappear off the face of the earth, right? We're going to have a situation where many of these executives and people have really high skills, and they are going to go to companies that are being successful. So the companies that are successful, these startups that are really successful, make it even more successful because they have the right people behind their brand. Now, in the actual business side, there could actually be a whole lot less competition because a lot of your startups are simply disappearing, and there really isn't going to be a lot more popping up because VC funding and just funding in general from the stock market to individual investors is not going to be as lucrative as it was in 2021. You've got to understand that a lot of these investors want to invest in companies. They want to invest in opportunities. They want to invest in innovation, but it takes a long time for a startup or any company to see success, and investors don't want to lose all of their cash investing in companies that are not sustainable. They basically put it all on the line, or they borrow money, and with Federal Reserve interest rates slated to go well above 5% in 2023, that is a big risk for an investor. They now need to make an above 5% return on every investment that they make, and that is just not going to be the case for most investments. Investors are ultimately going to lose a lot of money, so they're only going to put their money into proven strategies and proven businesses. And this is something that we have seen before in our economy. We have booms and busts all the time. When you have a lot of booms, there's so much money getting poured in, and like 2021, investors were basically investing in anything under the sun. You had thousands upon thousands of startups kind of beginning all throughout the world because investors saw that as an opportunity, and everything was winning because people were spending money and really low interest rates were everywhere. Many jobs were created because of that, and that means that your really high talented people were starting businesses and entrepreneurs were contributing to the United States economy. But realistically, a lot of those jobs and a lot of those startups never should have really received funding in the first place. Reality is, not every business is going to survive. In fact, 90% of startups will fail within the next 5 or 10 years. Many of these startups and businesses put growth before anything, so they hire as many people as possible and they try to grow the brand through advertising as much as possible. And at some point, that just is not a sustainable business model. They end up taking on too many costs, and that is exactly what many of these startups and businesses, even on the New York Stock Exchange, have done over the last 2 or 3 years. They've gotten in too deep in debt, and now the debt collectors are calling. They are shutting down, but like I said, there's going to be a lot of opportunity for those who have really high in demand skills. The people who are working at these startups, well, they may lose their jobs initially, but that could mean that they go out and start another business. It could mean that they start an even better business or work for an even better and more sustainable company. That is the bust side of our economic cycles. We have the booms and we have the busts. The busts mean that all of these companies that shouldn't have existed in the first place, they get completely wiped out and they are absorbed by all of the good companies. When I say good, I mean the companies that are in a good financial position. So these are the companies that have a really solid business model and actually know how to make solid profits. Many jobs and positions are going to get cut and they're going to disappear forever, but that is going to pave the way for a new generation of jobs to be created. What you have to understand when it comes to businesses and employment is if there is a need for something, then there will be a job out there for it. And if there is a need in our economy, there will be a business or a startup that is kind of creating products or services to meet that need. More people are being born every single day, and we have problems in our economy right now, whether it's with our ecosystem, whether it's with our financial system, our food system, our energy systems, you name it. We have a lot of problems that need to be solved, and we have a lot of people out there that have needs and wants, and that means that there's going to be businesses that have to hire the most skilled people in order to get those jobs done. At the end of the day, what an economic bust and what an economic downturn does is create an opportunity for those who are prepared. The ones who have skills that are really, really high value and in demand are going to be hired by another startup or another company because they continue to bring in money for a company. They bring in money because their skill is something that our society needs. And like I said, that is extremely valuable. Just because they didn't make it at one company, well, that's not necessarily their fault, but they can be picked up by another brand and make significant changes and actually further that brand along even more, which means all of these companies that end up surviving might actually double and triple in size over the next couple of years. And the same can be said for companies who are in a really strong financial position, right? They are going to have the opportunity now to kind of grow their business even quicker to attract a lot of this talent that is seeking new jobs that didn't really exist before. The entire market was way too competitive for a lot of these bigger businesses to kind of take on really, really high level talent, but now a lot of these skilled workers are going to be coming from a lot of these startups looking for new jobs. The total number that could be, well, it depends on what the Federal Reserve does with its interest rates and how consumers spend into 2023. If we see a lot less consumer spending and really high interest rates, then more of these startups and more of these small to medium businesses are going to ultimately fail, or they're going to get absorbed by another firm, meaning we could see millions of jobs lost and then regained over the next couple of years. But the fact remains that those who are educated in both finances and their own niches will ultimately benefit from what happens in 2023. Workers cannot control what happens at the higher echelons of their own company. They can't control what goes on in the economy, but they can control what they do and how they respond to it. So if you want to see success in any economic environment, you are the one that's going to have to prepare for it. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.